Good morning, everyone. A.F. Thornton, Chief Investment Officer of Blueprint Quantitative Strategies. This is our morning trading notes live. Very short program where I go over my personal trading notes for the day ahead. For day trading, obviously these principles would apply to swing trading up in a higher time frame, but this is strictly for trading the day ahead, assuming you're going to have all your positions closed by the end of the day. So classic day trading, you'll hear the tick strike maybe in the background a little bit. You may hear the squawk box, but I want to keep those on because I want to keep my finger on the pulse of the market this morning. So yesterday we gapped down. I called it kind of a gap and crap day. A lot of people tried to short into the hole in the morning. We had a little bit of a short cover rally midday, and then we basically went back, sort of back down into the range from the morning. So pretty non-eventful day. What I would say is, again, more responsive trading. We'll look at that in a moment. I'd say the market is fairly well balanced between buyers and sellers for now, as we consolidate into tomorrow's inflation numbers, which the White House has said and everybody has said are sure to be very dismal. But as I hope you realize, that data that comes out tomorrow will be a month old. It's stale data, and we certainly have a picture that's changing before us. So we'll talk about that briefly this morning as well. But let's jump right into it. Let me take care of the government here first. These are the classic CFTC risk disclosures. My suggestion is to take a picture of them if you want to read them cover to cover. I'm certainly not going to waste time doing that this morning. I keep trying to skinny these down so at least you've got a sense of them. And basically, here's the translation. These are educational videos not meant to be investment advice. Futures, options, and other high need trading them. Just because something worked before doesn't necessarily mean it will work again, although we hope it does. This one I always kind of looked at with a jaundiced eye, but a lot of returns are overstated and distorted. Ignore them and focus on process. Only the government would give you a little warning like that. It sounds like a little projection to me because they're famous for distorting figures. I don't think we do that as much in our industry. I don't really know. I mean, to me, there's only one way to calculate returns. Who knew? And of course, we're not liable for your investment choices. We're new to Bluetooth. We're new to YouTube and Rumble and all these various platforms, even though I've been doing this for 35 years. We need a little bit of help and sincerely appreciate your help. If you like the content, please hit the like button and consider subscribing to the channel. We'd love to have you join our community and hit the notification button if you want to be notified of future videos. And also, realize that we have a lot more content over on our website at blueprinttrading.com, excuse me, or blueprintquantitative.com. There's no E in Blueprint. So with all that said, let's get right down to it. Here is today's sandbox. Now, I know it looks a little complicated on the surface, but it really isn't. And I certainly don't leave all this stuff on every day. But let's start with the big picture and we'll work our way back down. So, oh, that's a beautiful picture, but not the one I was looking for. Firefox problems, all right. So, let's start with the monthly chart. These purple lines frame the 100-year channel going back to the 1800s. And we don't need to get into that today. It's not appropriate for day trading, but just location-wise, I wanted you to realize that we are not even down into the 100-year channel. We're still in the 2009 bull market channel marked here in blue, okay? We are at the middle of that channel, so we haven't even begun to get into a severe correction. and I put you are here, but probably headed here. Regression to the mean tells me that we're probably going to go at least to the middle of the 100-year channel. Let me squeeze that data up a little bit. So there's that 100-year channel. Here's the middle of that channel. If history is any guide, that's probably where we're headed. And you can look back here and see the 2007 to 2009 bear market, which started actually in the middle of the upper channel and went right to the bottom. So as overvalued as that was, we still went to the bottom of the 100-year channel. Probably not going to do that here unless we get into a full-blown war, crash, something like that. But at any rate, just know where that location is. And by the way, if this is a cyclical bear market, meaning a bear market measured in months that usually drops 25% or so, then we should be done and we should be pivoting off the middle of this channel. If it's a secular generational bear market that is typically measured in years, we're probably headed here eventually. I don't think anybody knows the answer to that. I'm still leaning towards this being a longer term bear market, but you know, the market will tell us. And on the weekly chart here, just again for purposes of looking at location, let's just tighten that up a little bit. You know, one thing I mentioned here is bear markets usually retrace the final bull market rally leg, and that would be the entirety of the COVID rally here. But I think my initial target is, this is the February 2020 high over here to the left. And this is where we broke out of that high after the COVID crash. And that's where a lot of support sits, a lot of volume was transacted. So that's sort of my initial support target, probably around 3,400 or so. But anywhere between 3,400 and 3,500, you can see the 200-week moving average there, which also could provide support. So if we don't launch a decent rally from here, that's probably our next stop. Now, there is an argument for a rally here, even if we're still in a secular bear, and you need to do nothing more but lay the 2008-2009 bear market to scale over the current market. And right at this juncture, we had a pretty nice rally up into what Elliott people would call a two-wave that brought us up to the 50-week moving average, which would be like the 200-day moving average. And that ended up working out pretty well before we rolled over again into a pretty, really the worst phase of the downdraft. So in Elliott parlance, if this is a 1-2, it's the 3 that is the nasty decline. So just be aware of that. And then on the daily chart, and I continue to emphasize this every day, we are coming off a nominal 20-week cycle low, which is where we do get a little more power, but we continue to have this formidable resistance at 39.10, where so much volume is being transacted. It's now becoming the high volume node in this entire upper end of this COVID rally. So 50-day moving average is here. Yesterday we dropped below the 21 and the 5 again, which is kind of negative, but we're in a responsive, balanced market right now, which is reflected in this triangle. So my best guess is we're consolidating into tomorrow and Thursday. Tomorrow's consumer inflation report, Thursday's producer price or wholesale inflation report, and then we're going to get a move. So a lot of times the first move out of these triangles is a fake out. So don't get caught up in that. I don't think we need to worry about that today, but definitely realize that's what's going on the surface. So, all your moving average crosses, signals, and everything are really negated in what really is a sideways market. So let's look at our sandbox. This is our windshield for the week and for today. These are the ranges set by the options market, and there's a 70% chance we'll stay within those ranges. So this is the weekly expected move here in yellow. And that ranges from about 38.33 up to 4,000. And then today's sandbox is right here in outlined in yellow. I can widen that a little bit if it would help. And that's between 3,800 and 3,912. So note that the lower end of today's range is below the expected move low for the week. Market makers and dealers are going to fight to keep that 38, 33 level all week, but especially by Friday. And it is often the case that you can drop above or below the expected move, especially this early in the week. And there's still plenty of time for the dealers and market makers to bring it back. So the fact that we dropped below this today is not of great concern, at least initially. And we'll see how this goes. This could create a pretty cool buying opportunity, especially if you're optimistic about tomorrow's report. So I divide these ranges up into quartiles, and the bright green is where you typically want to go long. We can do the same thing on the daily expected move. So again, anywhere down in here, if you're bullish, is a great place to go long. If you're just a betting person. I'm not a betting person. I like to, I'm just going to go with the price action. In addition to that huge hurdle that we have at, a little bit above 3,900, we have a juncture of moving averages sitting right here, which includes the 5-week line, the 21-day line, and this is going to be a very tough area to conquer. So, you definitely have a lot of resistance in here, and it's certainly acting as such. You also have your 5-day line. So your 5-week, your 5-day, your 21-day, those are all upper time frame moving averages I would keep on your chart. And note this level here, this whole level between, say, I'd say it comes in around 38.68. It's a low volume node up on the upper time frame chart, and it was the beginning of the auction that gave us the big volume node around 3,900. And as I keep saying, if we can get above that huge volume node here, then the market doesn't have a lot to stop it, really all the way up to about 41.50, these highs over here. So if we can conquer those levels, we get into an air pocket here, and the market's going to move pretty fast. But it's also similar below, although it's not quite the air pocket down here. There's not a lot of volume that was ever transacted in this zone here. So the market doesn't have a lot to stop it if it wants to go down to 34, 3,500. So you can just see why this area is such a battle between bulls and bears, and it will continue to be likely until tomorrow. So other things in our windshield here for today, we've got the unfilled gap from yesterday, right? We've got, always mark your weekly open up here, because that's the difference between the weekly candle being red or green, and that's always a key level. You've got the 38.50 level sitting here, and that's, anytime you're going in 50-point increments, you got to pay attention, because those are points of resistance and support that have to be conquered. And that's pretty much it. You've got another high volume node down here at 38.12 or so. So that's where we are now. As I'm speaking here, the market's sitting at about 38.45. And that could lead to another gap down. So watch for the gap down today, depending on where the Globex ends up here, and apply gap rules accordingly. So very, very important to watch that. And how the market handles the gap, just like yesterday, we couldn't even get up and fill the gap initially. And so that was a good sentiment indicator that it wasn't going to be the greatest day. In fact, yesterday morning was just a chop fest all morning until we got that one short covering rally right here. So again, just looking at my notes here, consolidation into tomorrow's inflation reports. Overnight activity got pretty low. We traded as low as 38.20 last night in Globex. We've got a point of control. Most of the volume was around 38, 33. Surprise, surprise, right? The weekly expected move low. And we're about halfway up the overnight bar right now and slated to have a gap down. So go over the website, blueprinttrading.com, get your gap rules, apply them, use it as an initial sentiment indicator, and we'll go from there. So we do have the potential for an opening trade today. We've already looked at our location. Let's look briefly at the 15-minute anchor chart, and we'll take a look at the algo. Let me just bring that down into the screen today. Hold on just 1 second here. And the algo is at a buy signal, and it's above the trigger line, so that's important. We're going to want to pay attention to the trigger line today. But it's a triangle, so most of these moving averages and things are irrelevant. It's just a matter of breaking from the triangle, and always watch for the fake out. So the wave state is a kill zone. These are kill zones because you're going sideways, and you can lose a lot of money trying to position yourself in that kind of chop fest. But overall, the trend state is still bullish. The strength of the trend is a little bit low. I like to see that over 25. The gamma's rising, which is good. That means we've got some pent-up energy that we're expending. The weekly mean is sitting around 40.94, so we're not even close to that right now. Polarity trigger, these are where your stops would be, 38.16. A little more conservative one at 38.10. And the delta range, the bars are averaging about 34 points. The average has been 65. So, the bars have tightened up in here, but I use those ranges to help me set stops. And of course, the algo will automatically send those for us. So overall, again, even the anchor chart's still in this consolidation phase. Now, red letter reports, we got the NFIB business confidence came out lower than expected. Surprise, surprise. I haven't gotten into it. Obviously, what I pay attention to is the expectations component. I think that's the most important. I don't have a figure on that yet. We've got 2 Fed governors speaking starting at 12:30 Eastern Time, 9:30 Pacific. You might want to have your positions wrapped up by then. Who knows what those guys might say, but it has moved things around. The T-bill auctions are, there's a couple of them today. We'll see what the bid to cover ratio is and what the demand is for treasuries. One of the biggest issues we're dealing right now is there's so much money moving back into the U.S. that the dollar is rallying, which is usually inconsistent with the market rallying, and can put a lot of pressure on corporate earnings, puts pressure on emerging market debt. So definitely some issues there we've got to be careful of. And then the final thing, I haven't been commenting a lot on global events because, as those of you who know me know, I'll end up in some kind of rant that who knows where that'll take us. But the July 15th, Russia has called a special session of its Duma, and they're widely expected to declare war on Ukraine. Some people think that is a major escalation and event. But as I think most of us know, and I'm going to stop here, our esteemed elites in Davos and the World Economic Forum who absolutely want to crash everything, especially the United States, so they can reset it in their communist, dream world. They're trying to take us into war, and make no mistake about it. The stakes are very, very high right now, and it's one of the biggest risks to the stock market recovering, no matter where it bottoms. So let me leave everything there because I have 2 colleagues sitting next to me, and the wife is traveling, and they're giving me the signal that they're ready to eat and go for their walk, and I got to get all that done before the market opens. So I'm going to sign off here. Remember, if you like this content, give us a thumbs up, please. It will help us a lot. consider joining the community here. Hit the notification button if you want to be notified of all these things. And head over to the website. By the way, today we'll be in the trading room. And I'm going to have a promotion by next Thursday where you can do a 7-day free trial. I just didn't get it done quite yet this week. But consider subscribing and joining us over there. We have a lot of fun. And we've been making some good money. It's been fun the last week. Even though we're not doing trend trades, we do get some opportunities. So at any rate, we're down 22% from the peak. Certainly every opportunity for the market to bounce here. The sentiment's very negative. So let's just watch this consolidation and let the market take us where we want to go. So have a great trading day, and I'll see you this afternoon.